Howdy. Welcome back to Dion Talk. How much do you need to save to retire? I have no clue. That's the wrong question. We can't save our way to retirement. A closer to correct question would be, how much do I need to invest to retire? This isn't very helpful either. With stocks, it can be pretty close. The 4% rule talks about having 25 times your yearly cost of living invested. The expectation is an average of a 10% yield each year. And yes, there are bear and bull markets, but over a long enough timeline, the expectation is a 10% return. This gives us 4% to take out to live on, and 6% left to handle paying taxes on the gains, and in most years, covering normal inflation. The 4% rule doesn't really look good in years like this where we have inflation above 7% and a lot of stocks dropping between 20 and 40%. Some more, some less. So how much do I need invested works kinda if you're investing in stocks. I recommend watching Joe Kuhn, Kuhn, here on YouTube. He actually retired using the 4% rule, but he also uses a buckets strategy so that he's prepared for something like the bear market that we find ourselves in. For people like me, super lazy, and not wanting to save or invest 25 times our living expenses, the question isn't how much do I need to save or how much do I need to invest. Actually, if I didn't make videos, I would have no clue how much money I've invested in real estate or how much equity I have. Those are actually numbers that mean nothing to me. Here's the question that I think works for most investors. How much cash flow do I need? We can kind of use the idea of yield to come up with this. Here's an example. If you need $5,000 a month coming in and you invest in stocks with the 4% rule, you need 25 times your annual expenses. So if you need $5,000 a month, that would be $60,000 a year. So if you need $60,000 a year coming in with the 4% rule, it means that you have to invest $1.5 million. I am way too lazy to save, to earn, or invest $1.5 million, even if you include compound interest. With real estate, it isn't how much we save or how much we've invested, and it has nothing to do with our yield. That's going to trip up some real estate investors. It's a lot simpler than what is our yield. Here's what you need to think about when you invest in real estate. It could be for stocks too, but what is my cash flow? Cash flow tells us when we can retire, not our yield. Yield doesn't tell us cash flow. It looks like it does, but it really doesn't. When we calculate cash on cash return or yield, most investors look at your year one. I'm going to use a 10% return as a baseline. Some people get more than 10% as a cash on cash return with real estate, and some people get less. In order to get that same $5,000 a month in cash flow that we wanted with stocks, $60,000 a year. In real estate, with a 10% cash on cash return, we would need to invest $600,000, $60,000 a year being 10% of $600,000. Investing $600,000 sounds a lot more lazy and acceptable to somebody like me than investing $1.5 million in stocks. But I haven't invested $600,000 in real estate. I actually have $0 invested in real estate currently, and my cash flow is a bit over $200,000 a year. $200,000 a year is a lot easier to live on than $60,000, just saying. But how? It isn't yield. It isn't compound interest. It's cash flow. Like I said, if I didn't make videos, I would have no clue how much I have invested. But since I do make the videos, I know that I invested about $320,000 from my earnings and about $300,000 from the cash flow from my rentals. So it looks like I have $600,000 invested. But not today. In reality, I'm going to show you that I have $0 currently invested in my portfolio. First, let's look at the yield model. In order to get that 10% return and have it equal $60,000, we would need to invest $600,000. Do you have $600,000 in cash laying around that you can invest? I don't. I actually never have. But I did have $28,000 saved to house hack that first duplex. and then saved for a couple more years to buy another duplex, and then saved for about a year and a half to add the next duplex. And it got faster as I went on. You see, this is what's missing in the yield calculation. Time. We look at the yield on a rental property to determine if it's a good deal or not to know the cash flow. We're using that yield calculation to look at year one. By year 2 or year 3 on almost all of my properties, my yield is 2 or almost 3 times the expected yield from that first year. I invested about $320,000 from my own earnings and $300,000 from the rental profit. So technically, if you're looking at what I've made from my job where I have to sell my life 1 hour at a time, I had $320,000 invested. But remember, I said I have $0 currently in my portfolio. That's because over the last couple of years, I've saved about $450,000 sitting in the bank. So if I stopped investing right now, I have more money in the bank than I had invested in my portfolio. So right now I have $0 invested in my portfolio. I'm probably going to take that $450,000 and buy the next rental. I don't need it, but the money's got to go somewhere. So let's look at these questions again. How much do I need to save to retire? No clue. Wrong question. How much do I need to invest to retire? No clue. What type of investing are you doing? How are you calculating your yield? To me, still, wrong question. For me, it's how much cash flow do I need to retire? And this isn't something we get from calculating yield. Yield is used to determine if the deal is worth it or not. Here's the question I did ask myself. How much cash flow do I need to retire? What is my cash flow now? Not what is my yield. What I invested is meaningless to me. I only know those numbers because I've made videos on my portfolio. To retire, I needed to calculate my freedom number, or the monthly income I do not need to work for that covers the type of lifestyle that I want to live. Then I used the 4X rule, meaning I wanted 4 times the cash flow I needed to live on coming in without me having to sell my life 1 hour at a time. And then I retired. So ask yourself, how much cash flow do I need to retire? Not how much do I need to save, or how much to invest, or what your yield is. Just ask yourself, how much cash flow do you need? At some point, this might change your investing strategy from the acquisition phase, where we're trying to acquire as many assets as possible, to the portfolio stabilization phase, where you're trying to make sure that you have the right debt structure in place, or it might change your investing style to where you're pursuing more cash flow instead of a larger portfolio. With 16 rental units, it's entirely possible,
but not today,
that I, at one point, sell a property or two, take the gains, and pay off debt on other properties. I would have a smaller portfolio with more cash flow. I would lose appreciation on multiples of what I've invested. I would lose part of the depreciation schedule. I would lose some of the principal pay down. So there are a lot of things to consider. But if you're always pursuing how much do I save, or how much do I invest, or what is my yield, it doesn't give you a way of looking at your entire portfolio to make the right decision for the next step for you. Because the next step between rental number 8 and 9 is very different than between 0 and 1. And sometimes very different between rental 137 or 140. Just ask yourself, how much cash flow do you need to retire? Because that's the metric that will actually tell you if you can or not. And if you want more information on that 4X rule that I talked about, check this video out here. I hope this video at least made you think. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.